YouTube Studios tripping out. Thanks for the wonderful experience, YouTube. And all right, we got it all figured out. I'm gonna do one last announcement. Stream is live. All right. So, what's going on? What's up, fam? Thank you all for tuning in. Seems like a slow stream starting off, but I'm still gonna cover what I'm gonna cover. So for you guys that have been active, right? I'm gonna start with the S&P because it tends to be like, I believe that the granddaddy was gonna happen to markets since I wrote that risk on paper on it, right? So going to the S&P, so we're gonna start with. Before I go any further, so I'm going to cover the S&P, I'm going to cover Bitcoin, I'm going to cover ETH, I'm going to cover the QQQ. Basically, it's going to be an index deep dive, right? So we're going to go over what the indices are doing, so the S&P, the QQQ, and their futures. And we're also going to look at cryptos, right? The majors, and then if you guys have like token requests or stocks, we can talk about individual equities. A couple of months ago, almost like 2 months ago, I was talking about we're going to see a pullback in stocks, like stop longing, stop buying out of the money calls. I did a video on that, and it took some time. It took like a month to start playing out, but now we're seeing it play out. And so in the big picture, right, I want to see one of these retests, right? When we look, there's these blue arrows from probably a previous stream because I talk about this stuff a lot, right? The fib retest is when we see price come back and retest the previous level before continuing on up, right? And we're really lacking one at 393, right? I don't think it's going to be straight ways down, right? Another one of my hypotheses, right? Is it a hypothesis? I think it is that we're going to see something very similar to what we saw in 2018. Is the current market structure setting up to do a corrective year, right? This was 2018, and in hindsight, it was very corrective. It wasn't smooth. It wasn't a continuous ride up, but it happened after a nice bull run, right? Now we see something very similar happen here in the big extension. A big bull run, and I think what the market does after these runs is kind of what we saw here, is it just shakes out all the players, right? The rhetoric, right, has been inflation, so we're going to keep bidding up, right? But at some point, that strategy, bidding up inflation is not going to work anymore, right? And I think we're seeing that happen already, right? Once the inflation numbers came out, right, you can't really trade the news, right? Need to stop saying, right? So what I think is going on now is, since those inflation numbers are out and we already we already know what a fact is, that bidding up inflation strategy, it's not going to work. I don't think it is until we have some kind of liquidity test, liquidity grab, some kind of retest. And I still firmly believe that we're going to see some kind of chop like this. Now, in my last stream, I think it was like last Monday, we were dipping down. I said, hey, we're probably going to see a pivot back to like 444. Now in Discord, we did have a short down to here, right? And then down here, what did I say? We bought calls at 444. We bought UPRO calls. We bought SPXL calls. We got up here, I said, hey guys, take partial profit, and we're going to buy puts because we're going to come back down, right? And its nature, this move was just a basic bearish 61.8, which is the reason I took out a short on BTC today, and we'll get into that shortly. Now, how do I see this playing out on the S&P? It's kind of... We're going to have to see what today brings, right? But the reason for that pivot of the 429 is it's a fib extension, right, of that previous range. You can go to the hourly, and it's going to be a little bit more clear what's happening. So my closing note from yesterday in Discord was, if we see a double bottom, then we're likely going to get a pivot up. But more interestingly, what we saw is the DXY, the dollar index, top off, right? And that's very relative to everything we're seeing because the dollar index had been on a tear, right? On a really big bullish tear. So I'm going to leave the S&P on the right side of the screen. I'm going to put up the DXY on the left side of the screen. And hopefully it's my annotated chart. It's not. So with the DXY, it's running in a couple of things, right? And the major resistance I talked about yesterday was a 61.8 swing, right? And if you go off this breakdown right here, off the swing high to last swing low, when I posted yesterday morning saying, hey guys, like expect some volatility, it's not going to be smooth, but we're going to see maybe a pivot and indices, some kind of move up. It's because the DXY basically topped off at that minor 61.8. I didn't think it had enough momentum to push through, and basically the efficiency on markets, things need to retrace 61.8 before continuing in their whatever direction. So we saw that twice. I do have some calls open, right? We still have some puts open too. So I'd say for now, on the S&P, before I bring in the moving averages, as long as that like 429 holds as support, then we're likely to go back up and start forming some kind of base, right? Some kind of like resistance base where we'd go back to test 444 again, right? So we'd see a move up to 444. That would be ideal. I do think there is going to be some resistance along the way up, like 438 would be the next 61.8, right? So between 444 and 448, 438 would be the first move up, and then 444 would be the second. But if it was to go up to 444 and hold it, right, and then my whole like theory of we're seeing a repeat of 2008 or 2018 would be very much valid, because it's exactly what we saw, right? So I'm gonna actually zoom back in on this, and then on the other chart we'll put up the 2018. I call this an index deep dive, right? So this is what this is. So yeah. So what we saw in 2018 was a lot of volatility, right? You guys can see that. So we saw that high, a swing high, and a swing low, right? And if we do that initial fib retrace, right? We saw like a 78.6 move, right? And then for a move back down, right? So here what we saw is a 61.8 move. I'm just going to draw these out, right? So we saw our swing high, and then we saw our swing low, and then a 7.86 retrace, and then another move down, right? And here we saw our swing high, right? And then our swing low for a move up to 61.8, and then a move down, right? So another move up to 61.8 would be normal, right? We also saw something a little more interesting in 2018 at the tail end of the year, and that was this, I'm not going to use the word because it's very improper, but like this really choppy shit move, right? Where, I mean, a lot of people saw this and thought, oh, double bottom, you're going to break out. But then we had that Christmas meltdown. I don't know if anybody remembers Christmas meltdown. We were short, and I didn't close my shorts, and I got liquidated on that position on the S&P. It happens, right? It happens. It teaches you lessons, right? It taught me when to stop shorting. And I don't think we're quite there yet. Like for today, I think as long as that base forms and we're fine, we could stop shorting. But if you get up to 444, I'm likely going to want to short it again, because we could be seeing something like this play out. Even though this is a daily and this is a 4-hour chart, right? We do know markets got a lot more volatile post-COVID. They move a lot faster. So what happened here was we had a swing high, a swing low, a 61.8, right? And then a retrace down, another 61.8. And then a meltdown, right? So I'm still eyeing for some kind of move like that. So if we do get another move to 444, I'd probably going to want to put it. Maybe we might even see 448 or some kind of extension. But I still firmly believe that 393 is officially the target, right? Something like what we saw over here. Now, more interestingly, when I throw up my MAs on this chart, on the S&P on the 4-hour, it kind of gives us a narrative, right? And I'm going to hide some of the DMAs. Just I'm going to stick to the two ones that I like to use on a long-term scale. And if you look at that 4-hour, right, what the S&P used to do was, oh man, can't showcase the whole thing. All right. So in 2018, right, when we broke below that red MA, pulled straight down to the white one, we had a lot of chomp, a lot of give and take, a lot of fighting here, right? So before that, when things were smooth sailing, when we had the 2016, 2017 bull run, right? Maybe 2017 bull run, we were trading above the red MA. All right, you guys can see that. These are some ugly blue draw lines. But as long as the chart was above the red MA, right, we were smooth sailing up. And then when we had the breakdown and the first touch off white and then it moved back up, that's when we started seeing a lot more visits down to the white MA. And then here we see that 61.8 I was talking about that failed a few times and the big breakdown. Now, moving in a real time, we're seeing something very similar develop, right? Where we had that touch and go, and then we had that extended run, and now we're starting to close below red. So at some point, I expect us to go to 416, 417, right? I don't know when. That would be a pretty good place to long, because historically it's really held up, right? If we test it's held up in choppy markets, especially the first bounce, right? But once we start seeing resistance happen at red or sub red, right, at 61.8 at red, right, that's when we know it's getting ready to really take a dump. Cognac nerd. So Kench, thanks for the love. Steven Robinson, I'm better. Jamie, yes, I'll catch you guys up on my personal update. So my fibs are not numbered differently. This is getting back to Cognac nerd on YouTube. So what my fibs do is they just show price. They don't show levels, right? Because I use like not proprietary levels, but I don't like really showcasing my levels to the general public, right? So they're just showing price, which is basically all you need to know. And they're color coded, right? The color coding is what matters too. So like red is 61.8, right? Green is 32.6, and then the blue and the magenta, those are just in no man's land. All right. That covers my look at the S&P, right? I covered what we're looking at in terms of like moving averages, what we're looking at in terms of fibs and like short-term pivots. In the long term, right, long scope, I do believe that we should start seeing moves back to the white MA, right? Possibly a big liquidity grab type thing just to shake out, some liquidity, right? The market needs it. Back here during COVID, when the government started printing and people were thinking, oh, we're gonna go into inflation, it was a good time to just bid shit up, just keep buying, right? Long. But since then, right, the index has made 95%, right? So what was inflation, like 5%, right? So things are up heaps more than inflation. So I do think the market's going to do what it does. It's going to be a little bit more efficient, and it's going to start chopping. Okay, Cognac, thanks for your question. Glad I answered it and glad you like my answer. James, I'm feeling better. I'm not feverish anymore. Like, I think 98.5 was my temperature today. I do still have gunk on my tonsils. It's gross. I did. Yeah, it's been a rough 2 weeks, man. Especially like Sunday, Monday. This week was really rough initially. But the fever is gone, which is good. Still not drinking coffee, still drinking like tea concoctions. All right, let's get into the QQQ. Jeez, gotta clean this chart up, man. All right, so Q is a little different. The Q's definitely rallied much harder, right? Much harder than the S&P. It's just what tech did after the crash. And it does have more volatility, right? We did see some moves below my red MA. Let's look at QQQ in 2018. I was mainly looking at the S&P parallel, right? Because I think it's more of a, it gives us more of a clear picture of what could happen. I think QQQ does look eerily similar. Now that we look at it, so this was January 2018 to Christmas crash, and I'm just doing this so we all know what we're looking at, because the other chart I know by like the back of my hand. All right. So we did see something very similar once again, right? The pullback to the white MA, and then we even saw a new high, which was an amazing bull trap. And then we saw the next shakeout, right? And then a new high, and it kept doing that until we got ready for crash mode, right? And I don't think we're quite at crash mode yet. I hope we get a consolidation like this, so we have time to decide how much VIX we want to buy, how many puts we want to buy. And time to get ready for the crash, right? So when we see this, that's when we know that, hey, like, we're getting ready to get rocked down. I like these crashes. So in terms of QQQ, I'm gonna wait before longing till we get a move to like the white MA, which is, I mean, another like what we already pulled back, 343. So far we've pulled back 6%. What's another 4%, right? What's another 4%? And that's when I'm gonna want to like heavy long. Until then, I'm just gonna stay clear of trying to trade both indices. Thank you, Tails. Thank you. All right, what else do we have? So that covers the S&P, that covers QQQ. Let's look at BTC. So this morning, I announced, so yesterday, before we even talk about this morning, yesterday I announced that, hey guys, like I'm gonna short, yesterday I longed ETH, right? And today I said, hey, I'm gonna hedge a short on BTC. And we think about it, why did I do that? Because so I do think we're in a corrective mode, and we did get our 61.8 kickback, right? And we're failing to close above, right? So one thing I really want to pay attention to on these up moves in a corrective market is not thinking that, hey, bull run is back just because we have some kind of flag, right? And I still have my ETH long, and I hedged a BTC short, right? Because the ETH long's in profit. I can move my stop to profit and let it ride, right? And then and if the BTC decides to shit the bed and go lower, then we can also see that unfold and enjoy a profitable move. But it did seem like a good place to get in and get a short at the 61.8, because this last 61.8 was really tricky, right? The one that I wanted a short but was basically unshortable. I'm just gonna remove drawings. It's a Bitstamp chart, great, right? And yeah, this was really hard to fill a short up here, right, at 51. Like there was it looked like continuation, and then it just dumped. So it wasn't, I couldn't capitalize on that move. So figured try this one. Now, more interestingly, let's hope all my fibs show up on the Coinbase chart. Dang it, they don't. It's in my notes though. I'll post it. So in terms of BTC, right? Let's go back to the daily. I'm gonna remove drawings. There's really two things happening, right? There was that 61.8 retracement over here at 51K that happened, the major one, and now we're seeing a smaller one try to unfold. So I personally hedged the short, right? And there was also the last bottom, right? So if we do this, you guys will see why I'm doing that. Remove indicators. Right, there was also the major 61.8 here, the bullish retracement. So this was a bullish retracement, 61.8 retracement from this trend break, right, to the new all-time high. The pullback was 61.8 to 30K, and now we're seeing the inverse of that unfold. So which would be the bearish retracement. And now we're back at that 50, which is 50% retracement at 47,158. So if we do get a breach, right? If we do get a breach and a continuation, I would be rather surprised, right? And we'll kind of have to maybe do another stream and say I was wrong. Markets are not correcting, or the correlation is broken, right? But until then, I think that 47,994 is going to be the top for now. Yeah, that's just my consensus right now. Now, if we do get a break and we move above, and the bull run is still going on, and then you could probably like knock out 75. But I think that's a very big hopeful shot. I think it is. Until we get above that 51, right? So until the market does break above a bearish 61.8 retracement and like regain this level, I wouldn't want to bet on continuation, right? I wouldn't want to bet that it's going up. And a big example of that is going to be 2018. So it's talking about parallels in the stock market. So let's look at parallels in crypto. And now my throat's starting to hurt. So this was like the first initial swing, right? We saw a move down and then a 61.8. It looks very similar to what we just saw here, right, on this swing, where it went up to 61.8 and just kind of got rejected back down. Not in terms of candles, but in terms of price action at the 61.8. And we saw a series of these moves. Happen, right? So these two rejections here were 50% retracement, right? You can see these wicks, and then this move here was a 61.8 off this last swing high, right? Tested it twice. Oh, bull run's gonna continue. No, we had failure at the red line, and then we continued down, and then same thing here. All right, so in terms of BTC, right, you see that rejection at the red line. That's my 61.8. So until we see this last high get taken out with a close above, I wouldn't be so bullish on anything, or on BTC, right? Even stocks. I do think we're corrective, right? Until we see this level get reclaimed by bulls with solid support, I think we're still gonna break back down. Jeez. All right, let's look at ETH. Remove drawings. So I think the best way to look at ETH would be in terms of where are we in a bearish 61.8 in terms of bearish retracement, because ETH did actually kick some butt and push above, right? 35 3356, right? So that's going to be that magic number. If we can get above it and keep going, right? And then I'd say like risk is on for ETH, then it could lift BTC up with it, and it could not. We did see a decoupling in 2018. Whenever BTC started correcting, ETH did go for a secondary run, and it did go to all-time high. It didn't happen at the same time. I'm not saying we're going to see an exact same repeat, but the chart is saying what the chart is saying. All right. Let's look at some tickers. Can you guys hit me with some tickers? Whatever you want, like some coins, some altcoins, shitcoins, stocks, whatever you guys want me to go over. We got about 15 more minutes till the market opens. That's it. Nobody wants anything else. Nobody wants tickers. All right, guys. Well, thank you for tuning. Oh, link. There we go. There we go. LCX wrapped ETH. Jeez. That looks like a bearish 61.8. Well, not quite there yet. That looks like a bearish 50. I don't even know what LCX is. I'm not gonna pretend like I do. But if you get an exit pump to here, geez, what was that? If you get an exit pump to 66, I would take it. I mean, you saw a lot of exit pumps last couple of weeks. So here's the thing about Link, right? Link likes to pump when BTC is correcting. So for Link to go on a rager right now, it wouldn't surprise me, because Link doesn't like to compete with BTC, right? And I'll show you what I'm talking about. So for Link to go on like an exit pump type thing, or just another big move right now, wouldn't be a big surprise. I really wouldn't. It didn't even 61.8. So I think we can move up to 37. I think it could just rage out, because even during the 2018 correction, Link was still pumping after BTC had peaked, right? And if we look at this last, if we draw a bullish retracement on this last move down, the 61.8 is holding, right? We got tested a few times, and now we're seeing it move up. So we could see Link try to continue up. The problem is, if BTC does dump, our alts are gonna follow, right? And that would be what would scare me. Yeah, I don't know much about LCX and their. I like the other chart better. So I'm pretty bad at, like, I don't even trade Uniswap coins, right? I don't do that. I'm not a swapper. Can't even chart these things. So here, I think we do need to see this happen. If it does, and it doesn't break above, that would be a pretty good take profit. If I was in this, that's where I'd get out. Why doesn't ETH follow what? BTC? Well, they're doing two separate things, right? ETH is going to proof of stake, right? So that tends to inflate prices, because shit's going and locked away, right? It's being staked. And don't get too bullish on like a Coinbase listing. What's that coin that got listed on Coinbase this year? Doge, right? I shorted the Doge Coinbase listing, and I did pretty good on that short, man. I shorted before, like I shorted at 61.8, and it did really good. I shouldn't have closed that short. I think that was the freaking top too. ETH can follow BTC and it can not follow BTC. Like it could do its own thing and it could not do its own thing. So it's just sometimes they do move with like a real tight correlations, and other times they don't. And let me try to find that one time in 2018. I think it was here. Yeah, that January 2018. It eventually dumped and did go in a bear market, so it eventually followed it, but there was like screaming exit pumps. I still have alerts at 600s. That's crazy. So if we look at the same period, auto. So January 2018. Alright, so what is this? January 2018, January 4th. Here's what we're gonna do. Rectangle. I'm just gonna talk about this breakout, right? December 30th to January 15, and we see December 31st to January 14th. Alright, so in that same time period, BTC did like a little hump, right? But then ETH like went on this mega run from 600 to like 14, right? So we could see something like that happen in the near term. I wouldn't bet on it, but we just the main resistance, right? The main factor that would let us know that something like that is about to happen is if we get a break above 33.56 and a close, like a strong close. All right, Fame Bam, thank you all for tuning into this stream. I'll try to make them more regularly. I was trying last week, but it's been tough. Was hospitalized for a day. Not COVID. You can still get sick and not have COVID. Anyways, thank you all for tuning in today's stream. Make sure to hop into Discord. It's like the first link in the video description. If you're not in Discord, join us. And yeah, I'll be in there for the rest of the trading day. Other than that, you guys trade safe, use stops, and smash that like button and share if